Investors in Starbucks turning their focus to a key investor day in September, where the coffee chain is expected to lay out its plan for reinvention. Drinks customization set to play a big role in that plan. Here's what CFO Rachel Ruggeri had to say to the morning show earlier today.
The way we see cold and the opportunity around cold and all our beverages, frankly, is our ability to continue to create more premium offerings with an opportunity to customize. The ability to personalize drinks is what we think helps differentiate Starbucks.
Big strategic focus there. All of that as the unionization remains in the headlines for the company, as well as COVID uncertainty in China and other regions. For more on this, let's bring in Andy Barish, Jefferies managing director, as well as Yahoo Finance's Brook DiPalma for this conversation as well. Andy, appreciate you hopping on the show this morning. Give us your take on kind of the strategy that you just heard the CFO laying out there on our show earlier this morning. How important is that going to be for the growth story for what is already a pretty well-known and established brand?
Yeah, good morning, guys. Thanks for having me. I think demand really hasn't been an issue, and Starbucks is looking for ways to kind of continue to meet that demand and also be able to take care of its partners or team members, which are called partners, in regard to just making their jobs a little bit more easier, giving them more flexibility, more safety, more benefits. And in doing so, retaining those partners for longer periods of time, which will then translate into a better and more consistent consumer experience and bring those customers back for more of those premium beverages that the CFO, Rachel Ruggeri, was talking about on your earlier clip there. So I think they're back to focusing, as you mentioned, on the reinvention, but really kind of starting with their own partners and having that begin to turn the flywheel again that Starbucks has so famously been able to drive over many, many decades now.
Good morning, Andy. Brook here. I want to focus a bit on inflation. It seems that consumer pullback is not happening. And in fact, Rachel told us this morning that they're encouraged by the demand they're seeing. But with that said, what exactly do you think has to go right in the fiscal fourth quarter to keep up that demand?
Well, I think there is a little bit of and will be a little bit of a seasonal slowdown as typically happens in the fiscal fourth quarter ending September as they prepare for holiday, which I think will be very strong for them. And again, they are focused, I think, focusing it internally and spending a fair amount of money as we've all tried to kind of quantify over the last couple of quarters. There's about $1 billion of incremental investment Starbucks is dedicating towards its partners, from increased training to benefits to really increasing their pay levels, which started in a significant way on August 1st by raising the starting floor salaries to $15 an hour, which also raised average wages above $17 an hour. And obviously even more in a lot of cases. So the fourth quarter margin-wise is going to be a tough quarter because of those incremental investments and some of the inflation, Brook, that you were talking about, which is showing early signs of easing, certainly on the freight and transportation side. There are some things that Starbucks is feeling from dairy and other commodities that are starting to ease, but probably won't be down enough to help the fiscal fourth quarter. But then again, as we move into fiscal 23, I think will be a much more normal inflationary type of year where they can start to expand margins again, which is really, I think, what the investment community is looking forward to and banking on to be buying the stock here.
Andy, on the labor front, I mean, how much of those wage pressures do you think will continue to increase? I mean, you mentioned the starting salary is going up already, but as we look at the labor market, there's not as much slack there. I mean, is the expectation here that they could be forced to move again?
It's a really good question, and it is being raised, obviously, by some of the headlines around unionization and things like that. But in the work we've done, this move and a lot of the other things that Starbucks has done over, again, many decades as being one of the most, if not the most progressive employers in the restaurant industry, I think points to what will be a step up here, but then kind of a leveling out of reinvestment in their partners. This is not a new thing for Starbucks. Yes, there is a step up here in fiscal 22, but they've been really investing behind people and technology for probably the better part of a decade now. And obviously, having a lot of stores on the West Coast, they've been subject to the minimum wage increases as well. So I think we're seeing probably the peak in wage and labor inflation. And obviously, they're trying to now bring about some customization of benefits and perks to their partners because they're realizing it's not a one-size-fits-all type of employment scenario anymore. This younger generation wants different things at different times. So I think Starbucks is going to address that with some flexibility and some additional benefits that we'll see as we move into fiscal 23 and beyond.
And Andy, very quickly, I want to hit on China for a second. We saw that it's hard to determine the time frame. That's what Rachel said in terms of recovery there. But do you think we hit the bottom in China? Are you optimistic about a recovery from here?
Yeah, I really do. I don't think there's anything wrong with the brand there. I think the unit growth continues to be exceptional and will continue to drive very strong returns. I think the brand proposition is as powerful as it's ever been in China and will emerge in a very strong place as we get back to some more normalized mobility in some of the big China tier 1 cities like Shanghai and Beijing.